All right, welcome back to the program. My guest is joining me right now, Ijeoma Emezie-Ezigbo, who is a partner and head transaction services, KPMG West Africa. We will be talking about doing deals in sub-Saharan Africa. Good morning to you, and thank you for joining me on today's edition of the program.
Good morning, Nancy. It's my pleasure to be here this morning. Thank you for having me.
You're welcome. Your publication, your report, I saw it. You released it just a few weeks ago, isn't it?
Yes,
How? Yes, yes. So I saw it. I was able to go through it. But why is this publication important? Out of everything happening in Africa, you're coming up with a doing deals report. Talk to me about it.
so thank you very much, Nancy. And I mean, it's interesting you mentioned out of everything happening in Africa, why doing deals?
Yeah.
Um, I mean, I heard you talk about the previous sessions. You mentioned investments going into the refinery, etc. We believe that deals and investments coming into Africa is very fundamental to African economic growth. This is the maiden edition of the Doing Deals in Africa report, in Sub-Saharan Africa report. Previously, we focused the two previous editions, even though the maiden editions, this is the third in the series. The first two editions were focused on Nigeria only. But what we realized was as investment, as the macroeconomic environment in Nigeria became very challenging, not just in Nigeria, but also across the region. I mean, when you look at Ghana, when you look at East Africa, when you look at South Africa, it's been similar stories across Sub-Saharan Africa. Investors in the bid to hedge their investments have sought to focus across the region, diversify their portfolio across the region, rather than having a mono-country approach that they previously had. Based on that finding, we decided that we needed to expand the breadth of the report out of focusing on just Nigeria to looking at Sub-Saharan Africa in general.
Now, in your report, of course, it was divided into parts, but when I went through the executive summary, what was going through my mind is the question to ask you, my second question is, how have global trends, and the global trends, of course, in the last 2, 3 years that we've seen, of course, notably is the pandemic COVID-19, the threat of even a recession, especially in the United States or even in Europe, the threats of a banking crisis, for example, in the United States, though they say they have it under control, we saw what has happened with the Silicon Valley Bank, a cautious outlook as well, not also forgetting high inflationary trend that has, that is impacting global economy. Then we'll come to regional space where there are threats of wars. We see what's happening in Israel, Hamas now, coups in different parts of Africa, about 3 or 4 countries, then political instability. So how did you and your team put this into perspective, and what are the companies as well as investors saying concerning the global and the regional threats which I've mentioned?
Thank you very much, Nancy. That's a very interesting question. So I'll look at the different trends that you have mentioned in 3 buckets. So the macro trends is one, the political trends is another one. When you look at macro trends in Africa, for example, Africa has taken significant macroeconomic headwinds, and this has impacted the level of investments coming into the region. What we saw that with COVID, we had a lot of stimulus money being pumped in the more developed economies, especially in the United States. And post-COVID, this drove level of inflation in those countries, and risk and the and the central banks of those respective countries, including the Federal Reserve, reacted positively, raised the level of interest rates in those countries. And what we saw that when they raised the level of interest rates in these countries, investors became more open to investing in the local economies versus going into African region where you have higher risk premium. And of course, which means that our level of interest rate and the returns are not aligned with the risk premium that the investors are placing on on the assets in Africa. Also, we see heightened increase in political risks. When you look at the report, one of the key areas of risk or challenges to doing deals in Africa that investors mentioned were one, the macroeconomic environment, inflation, and the exchange rate volatility. More so, exchange rate volatility. When you look at what's going on in Ghana and what's going on in Nigeria, we have seen exchange rate volatility even in South Africa just to a more moderate level. The level of inflation has been rising. At least Ghana now appears to have gotten it into what would I say, had appeared to have gotten a hold of the inflation levels. It's trended downwards from 43% it was 2 months ago to about 38% currently. Nigeria is at 27% and still expected to be trending upwards. I heard you mention about the federal government or the CBN trying to clear the backlog of FX in the market. We hope that that would help us temper the volatility that we've seen in exchange rates. So those global trends, both on the macro level and on the political level, the unrest that we have seen recently across different regions in Africa, has impacted significantly the level of foreign investments coming into the region. As at Q2, for example, according to Nigerian Bureau of Statistics, we saw the level of investment, foreign direct investment in Nigeria at an all-time low. It stood at about 134 million for Q2, which is the year-to-date period for the first 6 months of the year. As at 2002, the level of direct investment was 468 million, and as at 2021, the same level of investment was at 699 million, almost $700 million. So, the whole macro environment globally and regionally, Nigeria specifically, is really impacting the level of investment that we see in this country, which is really, really not a good place for us to be in. We reckon that we need a lot of foreign direct investment and a lot of capital importation coming into the country for us to be able to maintain our level of foreign reserves and, of course, help maintain the stability in the IFX market and help drive down inflationary levels.
Now, from all that you have enumerated, according to your report in part 2, you titled it Trials and Tribulations. And I was actually wondering what investors are thinking amid, there's an upside potential definitely regarding Africa, investment in Africa. But out of all these macroeconomic challenges which you've mentioned, there's currency risk, there's political instability, there's, of course, transparency issue, which was a bit surprising to me too when I read the report, and I hope we'll have time to talk about that, especially in West Africa and Nigeria in particular. In fact, you mentioned transparency issues and lack of information. I was like, why would Nigeria always come out in this? But I hope we'll have time to talk about that. So out of all these issues, what bothers investors the most, out of all of this and perhaps more?
Yeah, so the macro was a top finding for us, the macro environment, macro instability. When you layer that on with political risk, that kind of just blows it out of proportion, right? So that's the biggest risk for investors. The second one, like you rightfully mentioned, is the level of transparency. So when we look at the different stages of an M&A or the different stages of an investment cycle, the first stage is the pre-deal, right? So you get your advisors to help you evaluate the risks inherent in those. The macro environment is not specific to Nigeria; it's actually within sub-Saharan Africa and global, like you mentioned. So those sort of risks you can evaluate, right? Then when you then do the investment, you then get to the point of then looking at the portfolio asset that you have invested. You then look at the post-deal issue. Now, the transparency that you mentioned with respect to lack of information is also not just lack of information at the pre-deal phase when investors are trying to do their due diligence, but also the sort of governance that these companies have post-deal to ensure that they are able to return the investors' money at a risk-adjusted on a risk-adjusted basis. When you look at Africa, when you look at some of the stories that have happened in recent times in the fintech, you see that you've seen quite a lot of companies at the startup phase fail even after they have attracted financial investments from foreign investors, which is not really good for us as a country. So, but one of the things that we do as deal advisors in this region, not just from a deal advisory point of view, but from a multidisciplinary professional services point of view, offering audit, tax, and advisory services, we support our clients to evaluate these risks, not just in the pre-deal phase, but also in post-deal downstream support to ensure that they have the right level of governance in these companies to drive increased transparency around the numbers that they are reporting and around the operational performance, etc. And also just to support the companies with respect to compliance issues, tax issues, to make sure that the businesses are still able to thrive post investment, and also continue to encourage other investors to still invest in the region. One of the things that dissuades investments is when you see a lot of investments going into a particular country and you see that those investments, that there's a high risk of those investments failing, it dissuades investors. So one of the things that would encourage investors to continue to come in is if we're able to support these businesses to drive the level of governance, financial reporting, increase the transparency around their financial performance, and just really best principles around governance, etc., to help them continue to attract investment, even for the existing businesses to scale and new businesses to help them thrive.
Which countries in the region commanded the most deals and even enough financial muscles? And why did we see that? When I was reading your report, I was seeing a lot of South Africa, South Africa, South Africa. And I was like, oh, where's my country in all of this? Even during going green to South Africa is leading. South Africa, of course, even in the reports, is you said is the most advanced. But Nigeria is the biggest economy. So I don't know. I think we just need to, our officials, our leaders really need to make that nexus a bit tighter so that as we are the biggest economy in Africa, we can actually also be the most advanced. It will be sweeter like that because we are big, but we are not better. We are big, but we are sick. So what? Talk to me about the countries and the region. I've talked about I'm cracking you up this morning, but it's just the story of our country, and I hope that, and I know, of course, officials are listening, and why we are saying all of this is for us to do better. So, which regions on the continent did better, and also what sectors? I saw that you mentioned the EMU sectors, energy, mining, as well as utilities. But what other sectors are also promising?
Okay, thank you, Nancy. That's quite a triple-fold question. And
Yeah.
really, I share your passion in Nigeria and really praying about the state of our country. So, two things. When you look at the regional pattern or the regional dynamics of the investments, like you rightfully mentioned, South Africa led investments. South Africa accounted for about 50% both in deal value and in deal volumes. But Nigeria's story is also not so far away from South Africa. So maybe that should be some sort of good news if that helps with the feeling this morning. Nigeria was second, and when you look at the sectors, the key sectors driving investment in the region, like you rightfully mentioned, it's energy, mining, and utilities. That's the top sector. Energy, mining, and utilities accounted for 40% of deal value and 20% of deals at $7.8 billion. And when you look at what's driving investment in energy, mining, and utilities in Africa, it's really the abundance of natural resources in Africa, really led by Nigeria rather than South Africa. So, Africa is home to 30% of global reserves, and then 12 and 8% of global wood and gas reserves, respectively. Led by Nigeria primarily. So I think that's something that we should take away, that Nigeria is still leading in terms of the abundance of natural resources. So in spite of investments going into South Africa in the first instance, we expect that as a macro, as a leadership, as the policies of the current government continue to come into play in the short to medium term, we expect that more investments will come to Nigeria. However, Kenya is also another region that is thriving. Kenya's growth in the investment year on year was about 60%, even though in value terms, Kenya did not contribute significantly to the value of transactions. When it comes to the sectors that we are looking at, financial services is another sector. Financial services was the second sector. Financial services continues to attract investment. When you see the banks in Nigeria, for example, they are looking to expand into the region. You have seen the news about Access Bank. A lot of Nigerian banks want to go into Africa. And when you look at what's driving this Africa, we look at the intra-Africa trade initiatives. We look at the whole issue around Africa Continental Free Trade Agreements, where we expect more integration within the continent. This is expected to drive more integration within the continent and, of course, drive more financial transactions within the continent, which is what is really driving our Nigerian banks to seek to go into these regions, to solidify their presence in these regions as the region seeks to integrate. Another sector that we see is telecoms, media, and technology. We have a lot of, when you look at gap, we have a lot of gap in the last mile infrastructure. So today you have a lot of data capacity that has come into Nigeria. You have a lot of fiber optic investments coming into Nigeria, bringing that data into Nigeria, internet capacity. Well, how then do you deliver that to the last mile? So people who have internet challenges at home, data connectivity in the offices, in corporates, in big banks, etc. A lot of investment going into that sector to ensure that we have connectivity. Of course, the connectivity is then what drives our ability to successfully close financial transactions. So that's one area that we see a lot of investments in. The areas that we expect to see investments that we don't see investment, I'm sure you'll be able to relate with it. Agriculture is one area. Based on our arable land space, based on our population, we should be able to see quite a lot of investments going into agriculture, because agriculture is one sector that fits the consumer market sector, the food processors, etc. But we see very little investments going into that sector. Agriculture is still under recorded about just 7 deals in sub-Saharan Africa, which isn't good enough for us as a region. That's one area that we expect that as government fixes the insecurity challenges in the north, and just provides the enabling environment for businesses to thrive and farmers to thrive and get their products, creating infrastructure for them to get their farm produce from the farm gate to the markets and to the consumers. We expect that we'll see a lot of investments going into that sector, which is really, really necessary for us to thrive as a country.
Okay, Ijeoma, in the next 3 to 4 minutes, let's see if we can take a look at these questions, and God help you with that. For the oil sector in Nigeria, we saw that international companies were selling their assets to local companies. And when I saw that in your report, it was really heart-wrenching that international companies are selling their assets to local companies because they want to reduce their exposure or they want to exit the country. So I would like you to talk on that. Then secondly, why did we also see some deals fail in Africa? Thirdly, you were talking earlier about technology. Nigeria is not also too doing badly, but we also see, I think South Africa is ahead of us in terms of even smartphone density and in terms of technology adoption, as technology could be an enabler for other sectors. So I would really want you to take a look at that. Then perhaps the going green aspects, which I talked about earlier. South Africa also seems to be the leader, the most advanced country in renewable energy. How do you think that Nigeria can integrate both, not both now, because we have both hydro, solar, even wind into its energy mix? So your time starts now.
Okay, thank you, Nancy. I'm not sure how many of the answers that I can get into play. But let's start with technology, right, which is an interesting question. The report rightfully finds that technology will be fundamental to the next level of growth in sub-Saharan Africa. About 20% of the participants indicated that technology will be the most important driver of the next investments in sub-Saharan Africa, of the next investments in the region, which is quite insightful. This is more so as we see the adoption of technology across key sectors. We see it in financial services, fintechs, insurtechs. Quite a few of Nigerian fintechs have emerged as global unicorns. You would appreciate Interswitch, Flutterwave, PayStack, as financial investors seek to leverage technology to drive growth in the continent, especially in terms of inter-Africa trade, as I initially mentioned. We also see the emergence of technology in the health sector, the emergence of health techs, the ed techs, and the growing adoption of e-learning platforms in that education sector, and of course in agri-techs. Why do businesses fail? To be honest, I'll tie it back to some of the issues that we've seen, especially in this technology. I had mentioned to you how some businesses have failed. We've seen tech capture a lot of those failures. We've also seen the issues that the crowdfunding platform had recently, where they requested that the guys who provided them they should convert to equity and share their risk. Businesses fail for different reasons. To be honest, there are various reasons, including the macro environment. It's one reason why a business can potentially fail. If you have looked at a business model that because of regulation, that business model has changed, or you have made an investment in the sector and inflation, etc., rising costs means that you can't raise additional capital to fund the business is more likely to fail. However, businesses also fail because maybe sometimes investors have a different perception of the risks inherent in that business. And this is where we say you need to do your due diligence as an investor. You need to understand the business model, you need to understand the operating model, you need to understand what you are going into and how this business is expected to return your profit or return capital. You need to be able to scrub the cash flows and you need to do this with investors, with advisors, with a team of advisors who have good understanding of the local markets and not just rely on your intuition. We see a lot of investors relying on their intuition and not really using local advisors to carry out extensive due diligence, whether it's financial, whether it's tax, whether it's commercial, to make sure they are challenging the financial and business models of these businesses prior to investment. That's one. Ongoing green. You know, we're all aware that Africa still has a long way to go in terms of investment in going green. You had mentioned that South Africa is leading in this space. South Africa is really, really leading in the space of going green. But we read the announcement of the COP28 president designate at the inaugural Africa Climate Summit in Kenya of about 4.5 billion United Arab Emirates finance initiative to help unlock Africa's clean energy potential. This is an area where Nigeria can look into. South Africa is currently leading the effort, like I said, is the most advanced region in terms of renewables, and they have made significant progress in integrating both their hydro, their solar, and wind into their energy mix. And with abundance of natural resources in Nigeria and the heightened interest of both strategic and financial investors, I believe we are well positioned to accelerate our growth in this area.
Okay. Just one question before we go, because we have like a minute or two to end the show. In the midst of all of this, you and your colleagues, even the Big Four, because you're among the Big Four, you release reports all the time. What is really the essence of these reports? Is it just you do report and you put it on the shelves? Are there engagements with authorities? Does it actually make us better? That's one. Then the second one, the survey methodology, because in all of this, how did you even arrive at all of these which you have told me this morning?
Okay, thank you very much, Nancy. So the first will be on the survey methodology. So we always engage, and because investors try to be anonymous, we always engage the support of a third party to help us deploy the survey. So the survey looks at is a participant of about 300 participants across different regions that have done deals in Africa, in sub-Saharan Africa, in the last 4 years. And we try to get practical insight from them that we will share with the investing community, the investor stakeholder, both the private companies who are trying to attract capital and also the investors who are trying to come into the region, so that they can have practical insights and learnings from the experience of the deal-making process of these investors. And like you rightfully said, it's not for us to keep it on the shelf. One of the things we also intend that this report will help us do is to engage policymakers and help them shape the policy. When we look at some of the issues that the investors have presented with respect to challenges in investing in the region, when it comes to regulatory issues, when it comes to not having a enabling environment, when it comes to multiple tax jurisdictions, etc., we put this forward so that policymakers, as they seek to look at how to create enabling environments and make Nigeria and the region investor friendly, they can't seek to consider the issues raised by investors themselves on the reasons why investing in sub-Saharan Africa is challenging for them. This we expect should help us really and truly grow the investments coming into the region.
All right, thank you very much, Ijeoma, for joining me on today's edition of the program. At least we've been able to look at your report, you know, giving it an in-depth analysis, at least making our viewers understand what the issues are and what the solutions could be. So thank you very much for joining me. Have a wonderful week. And say me hi to your colleagues.
Thank you very much, Nancy, for having me. Same to you. Thank you.
All right. I've been speaking with Ijeoma Emezie-Ezigbo, who is a partner and head transaction services at KPMG West Africa. That's the much you can take on today's edition of the program. Thank you all for your company. Be the best you can be and be that change that you want to see. I am Nancy Nnaji, and AIT Reports is up next.